This is a special research report on Groupe Athena Inc., trading in the over-the-counter market. The pink sheet symbol is GATA, G-A-T-A. Our recommendation is strong speculative buy. It's a good defensive high growth stock. We recommended GATA a few months earlier and watched it soar. The stock has since come down in price. We again believe it should be bought here. This is a volatile stock for sophisticated traders. GATA has first mover geographical and technical advantages in a huge fast-growing market. Growth for the next few years will only be limited by its ability to expand internally. There's strong growth by GATA to date. After GATA's start less than 3 years ago, sales by GATA are up 324% in 2 years. GATA's current order growth and profit margin expansion will propel it even further. GATA draws its customers from Asia, not the U.S. GATA is in the pharmaceutical business. Cures for illness a priority purchase that cannot be postponed. GATA has strong cash position, will not dilute the stock. GATA has little debt, it's self-financed. GATA has strong order flow, predicts strong growth will continue. It predicts 18 to 24% increase in profit margins for fiscal year 2012, on top of 59% increase in revenues just based on current orders today. The services offered by GATA, it helps companies in India and Southeast Asia to get US FDA approval in the US for pharmaceuticals, medical products, and devices for sale in the US. This opens the huge US market to these Indian and Southeast Asian drug companies. GATA is a contract research organization, does R&D for the pharmaceutical industry. More R&D is needed as patents expire. Pharmaceutical companies outsource to save money. Morningstar sees CRO opportunities as, quote, compelling. Of all the CROs, GATA is by far the cheapest, with a forward PE of only 4. The lowest forward PE of the others is 10, the highest is 17, and GATA is growing the fastest. The more you look at our earnings model for GATA, the more you can find yourself solidly grasping the future potential when you buy GATA stock now. GATA may continue its near 100% annual growth rate and will expand profit margins 18 to 24% for 2012. GATA has offices in India and America. GATA can go to American target companies and U.S. regulatory authorities directly. GATA can also consult easily with clients in its large, fast-growing markets in the East. These dual locations give GATA significant geographical advantage. Foreign drug and medical companies find the FDA inspection process complicated, especially when they're trying to export to the U.S. There is a broad spectrum of consulting and assistance offered by GATA through this process. GATA serves a large market, Indian and East Asian drug companies. The Indian pharmaceutical industry is the world's second largest by volume. India's biotech industry grew 17% with revenues of $3 billion in 2009 to 2010. Manufacturing drugs in India is much cheaper than in the United States, giving Indian and Southeast Asian drug manufacturers advantages to selling in the U.S., giving them an incentive to use the services provided by GATA and its experts. Information provided by GATA now tells us that right now about 11 billion in drugs are being sent from India to the U.S. each year. Moreover, market estimates by GATA now indicate that in the next 5 years there will be as much as 40 billion sent to the U.S. from India. While there are many companies in the U.S. that can assist biotech and pharmaceutical companies in working their way through the U.S. FDA, there are few such companies competing with GATA in India or Asia, and GATA has the first mover advantage there. As of 2008, the FDA required such companies to be U.S.-based. GATA is based in New Jersey but has service facilities in India. Thus, GATA understands the large and expanding Indian and Southeast Asian markets and does not have to travel halfway around the world to visit clients, as would competitors based only in the U.S. GATA speaks the language of its Indian and Southeast Asian clients. GATA's float is tiny, only a little over 2 million shares. The total value of the float at the bid is less than $1 million with a small shareholder list. We expect large spreads and intense trading in this stock. When you understand the upside volatility of a float this thin and add the excitement that can be created when traders clearly envision the growth potential of GATA, you can see why traders find themselves eager to grab this opportunity. GATA is currently processing 60 million in orders, believes this may increase in the near term. GATA's earnings guidance predicts $40 million in revenues for 2012 with an increase of 1.5% to 2% in profit margins over its current 8% margins. This is an increase of 18 to 24% in net profit margins with a 59% increase in revenues. Thus, GATA earnings should be 8 to 9 cents per share for the fiscal year ending June 2012. At a price-earnings ratio of 15, GATA stock would sell at $1.20 to $1.35 per share in the next 12 months versus the last sale of only 30 cents. Remember, forward price-earnings ratios for the other CROs range from 10 to 14. None is growing like GATA. Every growth company has risks. Growth itself can create problems for companies, and the faster the growth, the larger the problems. We believe that GATA's growth for the next few years is limited only by its ability to attract talented key employees and create supporting infrastructure. Being in a market where your customers are selling $11 billion in products per year that will grow to a predicted $30 billion in sales for these customers in the U.S. market for the next 5 years will create strains on the company and management. Typical risks for companies of this kind include larger competitors entering the market, loss of key personnel, loss of reputation, regulatory sanctions, and changes in regulations. Another risk factor is the presence of the company in the pink sheet marketplace, which is notorious for its predatory short sellers and market manipulation. We do not believe that share dilution is a risk here, as we believe that GATA has sufficient cash flow to finance its expansion. GATA has a relatively low level of capital expenditures, and management has assured us there will be no dilution for at least 2 years. The limited float in GATA, along with the huge spread, will also produce violent fluctuations and limited volumes to buy and sell stock. This is only for sophisticated traders who can take advantage of such situations by buying smart and selling on spikes. Our recommendation: GATA is an overlooked, fast-growing company with technical, geographical, and first-mover advantages in the fast-growing Indian and Southeast Asian pharmaceutical and medical markets. We believe GATA is a long-term speculation. The company has a strong business model, strong earnings, and excellent growth potential. Highest predicted percent growth in revenues in the CRO industry, expanding profit margins, and the lowest price-earnings ratio in the CRO industry make GATA a strong buy. Possible target price 12 months from now, based on GATA's earning guidance, is many times the current price. We strongly recommend GATA at current prices for sophisticated speculative accounts. Now, here's how to get a free copy of How to Find a Home Run Stock. Subscribe now to my blog, investing-performance.com, www.investing-performance.com. I'll send you a free copy by email. The hard copy is $39.95 on Amazon. Subscribe now. Disclaimers: this is only a summary. Get the full report from www.investing-performance.com. Please note we have an interest in the stock of this company. See the disclaimer in the full report for more details. Summary disclaimer only is given in this video. This is a risky pink sheet stock, may not be for you. Consult qualified investment advisors for your situation. You can contact me at lux.investor@gmail.com.